Last night I had the strangest dream that my free money printer, that my juicy dividends, that my cash flow, it was all coming to an end. Oh wait, that wasn't a dream. That's the reality that we live in. The stock market finally didn't just go up and up and up and for all of eternity, for all of mankind. It didn't just keep going up. It actually fell a decent amount. You see, the stock market typically has a stock market correction, which is when the market goes down about 10% from a new high about every year or two. So this is common. It does happen. Despite this, many in our investing community, they continue to promote rampant misinformation as they are convinced they are going to retire by December. Well, guys, it's now August. How's that retirement plan coming for you? The high yield dividend warriors. If your portfolio couldn't even last one downturn, how are you expecting to retire off this? You mean to tell me a $90,000 portfolio isn't enough to retire on? You mean to tell me that there's consequences to taking out max margin? Yeah, maybe taking a loan against your house to buy more shares of a brand new ETF with zero track record or history? Maybe, just maybe that isn't a good idea. Forget forgiving student loans. We need to start forgiving loans against your house to buy dumb ETF loans. These investors are going to have to be screaming, "Save me, Kamala, save me." That 100% yielding ETF actually comes with some risk. You see all those big, bold text that the fund provides on their company website. It was to warn you about these ETFs. Yes, maybe they were trying to warn you after all that there are some risks. But you kept using that paper trading account, tried to trick your viewers. You tricked them into believing that you were getting $1 million in dividends a year using some dividend tracking app. What are you tracking? The dividends that you're never gonna get? Man, if you're gonna use a fake account, at least use some high quality companies in your portfolio. Like, even in your wildest dreams, the best ETFs you could dream about owning was wanting more shares of Tesla and Coney? And you know all that core compounding nonsense you kept saying to sell your courses to your fake subs? Yeah, that core compounding also works the other way around. When you're losing money, your money starts to compound and lose more money. All that money that you were giving your wife, man, I hope she got a prenup from you, because she's probably coming out of this exchange richer than you. Calling NAV erosion a myth? What do you call this? Or this? Or this? Even Stevie Wonder could see this coming. Reverse stock splits are a good thing? Yeah, great ETFs go up in share price, not down. Is that really so hard for you to comprehend? Like, just say it out loud. My ETF keeps going down and down and down in share price. In what alternate universe is this a good thing? You keep telling me to keep collecting my SCHD gold bars. Oh, thank God I did. SCHD is actually up 5% in the last month. And you know why? It's because they actually track high quality companies and they actually have metrics for their investing decisions. They don't just invest by going, oh my gosh, this company is giving out a 128% yield. Let me YOLO my life savings into this. Great decision, bro. Great decision. Every day on Reddit, I see a new stupid post. It's something like, should I borrow my money at a high interest rate to buy even more high yielding ETFs? Is this a bad idea? What am I missing? I'm getting free money. Yes, because Reddit is the best place to ask strangers what to do with your life savings. There's certainly no bad outcomes that can happen from that. The gurus of Reddit's online community will tell you the best advice. Now, Nvidia, for as great of a company as it is actually down 16%. Now, again, it's a great company. It will recover. But doing a covered call strategy that will capture only some of the recovery, that's where these funds are really going to get hurt during large periods of market volatility that we're experiencing right now. Now, don't let there be any confusion. It's your own greed that got you into this position. Don't blame anyone else but yourself. If a man has no problem lying to themselves, they will always lie to you. Do you really think you found the magic beans investment that Wall Street professionals with the best trading software, proprietary algorithms, are talking millions, billions of dollars of net worth? They couldn't find this. But you happen to stumble upon the magic beans, something that would give you 100% return every year. Did you really think that's how easy it was to invest in the stock market? Trust me, if I had a secret cheat code to making money, I'm keeping that to myself. I'm not going to be sharing it with anybody. Now, don't blame Charles Schwab. Don't blame Robin Hood. Don't blame it on the boogie. It doesn't matter what platform you go on. Your investing strategy is pure tomfoolery. You said you were in the $10,000 dividends a month club? No, bro. Those were Mickey Mouse dividends. Just looking at your projected cash flow for the next 12 months, that's not guaranteed money. I find it so funny that somebody can claim they get so much in dividends every single month, yet their portfolio finds a way to keep going down every month rather than up. Can you please explain this paradox to me? You said you were going to get dividends for the rest of your life? How is this possible when dividends are never guaranteed? How are you going to know what a company will do in the year 2050? Intel just stopped paying dividends for the first time in 16 years. 3M, earlier this year, they cut their dividend for the first time in 64 years. Now, dividends are a fantastic aspect of investing. They are a great way to build wealth, but they are never guaranteed. Only a foolish investor would ever say they are guaranteed. But then again, only a foolish person would ever do any of the things that I just said in this video. But for someone to check all the boxes, that is a special kind of numbskull. But thankfully, it's never too late in life to make a change. People have reinvented themselves and pursued new paths at various stages of life and been successful. The first part is admitting that you are wrong. 99% of people are just better off buying the S&P 500 index. Let me repeat that one more time. 99% of people in this world are just better off buying the S&P 500 index. There is no shortcuts to becoming rich. Unless your mommy or your daddy was rich, you gotta put in the work. Thankfully, the stock market provides so many wonderful wealth building opportunities that it's never too late. Now, join me on this journey. Join that Discord link below. We actually got some good conversations going in there. We actually welcome intelligent conversation and critical thinking skills for all investing skill levels. Let me know what you think about the high yield dividend warriors in the comments below. Make sure you're subscribed, and I'll catch you on the next one.